Hey everyone, welcome to the 101st episode of the Weekly Tax Update, back after 18 months. This is episode 101, October 17th, 2025. Thank you all again for joining us. This is me. If you need to get a hold of me, by all means, please scan the QR code. It will add me to your phone. And you can find my phone numbers and things. It's a free program. You have to endure just a little bit of commercials, if that's okay, quickly. So Tax Practice Pro is a continuing education provider. We primarily function on a monthly subscription for $52 a month. The $52 a month gets you unlimited live education, and it gets you everything that we have on demand, typically around 300 hours of material. As older material drops off, newer material goes on. We run by a monthly, typically each month has a theme. The theme is what most of the programs will center on. So right now we were just finishing up the investments month. November is one of our most popular months, getting the office ready. All programs geared towards what you should be doing for next tax season. Me, Jared Foose, a number of other fabulous speakers, Andrea McDonald, will be available. So it's a great month, and I hope you enjoy it. December are all of our tax updates, including federal and state update, New York, New Jersey, and California state updates, to name others. As things come along, we have a couple of planning programs that will be running. Dave Hilliard from CSEA is going to join us. Some of you know Dave. So this is going to be an exciting couple of months coming up. If you're not a subscriber, you should be. $52 a month gets you everything we're mentioning here. That also includes the annual filing season program. If you need to get that, it's included. We will send you the self-study text immediately, and then you can take the exam at your leisure online with us. As soon as you pass the exam, you will have your AFSP credential. We'll report the credits to the IRS. What you get from us is at least 20 credits in the monthly theme, at least one program in Spanish, at least 2 credits in international tax, generally from our friend Rita Ryan, and generally 2 credits of cybersecurity. I'm really excited to announce that Brad Messner is going to do the November cyber classes for us. So it'd be great to have Brad with us. December 2nd, join us for 2 credits in ethics presented by me. We've done this every year on Giving Tuesday for the last, I think, 7 years. This is the Tuesday after Thanksgiving. It's great to give a free program back to our industry. This year, due to scheduling conflicts, I am doing federal tax update for 6 hours. Join me on December 10th, December 17th. This alone, if you're not a subscriber, join for a month and get all the update stuff we do. But seriously, if you join us, you're going to like us. So we give you a whole lot of value for the $52. The 24 credits a month, the Spanish program, the international program, the cybersecurity program, which sell, these are $99 anyplace else. It's $1,056 of value every month. And on top of that, the AFSP, our annual ethics, and the 8 hours of federal update, plus the state updates you might want. So fabulous stuff. Thank you for enduring my commercial. I appreciate it, and it lets me do this program for free. Our one disclaimer I want to give you is I never mean to talk about politics. We won't talk about anything political. There were a couple of items that I deemed too political, and I dropped them. But items we do talk about are items that are going to affect us. So if we say something, it's not political, it's happened. And we as practitioners are going to need to work through that issue. So I think it's important to mention some of these issues. So we just started on Wednesday, week 3 of the government shutdown. No end in sight. The last shutdown in 2018 lasted 35 days. I couldn't find the exact statistic, but the IRS was getting as many as 1 million documents a day because you couldn't call in. People wanted to meet deadlines. They wrote in. And at the end, TIGTA had estimated if they could add 20,000 documents of processing capacity per day. That's a lot of document processing. If they could somehow use their staff to get 20,000 more a day, it would only take them a year to get to normal inventory levels. And it probably did take them at least a year. So right now, with reduced staff, it's going to be interesting where we go. There's currently no immediate end in sight. They're not, to the best of our knowledge, they aren't meeting to work through this. The Senate has voted throughout the week on different Republican measures to fund the government, but neither side of the aisle budged. Nothing passed. Democrats in Congress would like the Republicans to negotiate an extension of the premium tax credit. That funding is going to end, and folks are either going to have no insurance or it's going to be astronomical in price. You have clients that get the PTC, you understand, or the advanced PTC even, and you understand that there's no way they could afford health insurance without this. Republicans, though, have been asking, and this is since before the shutdown, Republicans have said we want a 6-week continuing resolution. Let's get the government, before they said let's not shut the government down. Now they're saying let's get the government running. Same thing, nothing has changed. Ruben Gallego of Arizona publicly said the Democrats are seeking out conversations with the Republicans. They're all talking this up. Nobody's asking for promises. They're just talking it up. Majority of Republicans have held firm. Some of them are starting to switch about reopening the government before they have a conversation on the Affordable Care Act funding. Interesting side note, if you remember, there were 20 taxes passed in 2013 to permanently fund the premium tax credits. 19 of them are still in place. President Trump in his first term almost immediately signed an executive order getting rid of the individual shared responsibility penalty, which was one of the 20 taxes. The 19 taxes remain, so they shouldn't have an issue with funding. They've got the money. TCJA hadn't modified them, so they weren't set to sunset, and they weren't affected by OBA. So there's no reason why they're not continuing here. They have the funding. All right. Now, the White House has continued, though, during the shutdown to do reductions in force and the elimination of certain programs. Democrats introduced a bill seeking financial relief for unpaid federal employees. Brian Schatz introduced this in the House, in the Senate. Brendan Boyle in the Assembly, that's the state, in the Congress. They've introduced bills that will do the following. For workers that are impacted by the shutdown, they'll get 3 months from the end of the shutdown to pay any taxes they otherwise would have owed. They'll have protection against foreclosures and evictions, and any student loan lenders will be barred from garnishing them, taking collection actions, garnishing them, either their pay or federal tax refunds. All very strong stuff, all things we give to active duty military when they get deployed. So why not, right? White House issued reduction in force letters to 1,300 IRS workers. This is reduction in force is we no longer need you, you're released. So all IRS divisions were affected. Some of the folks that are currently working, we're going to talk about that in a minute. There's about 40,000 IRS employees still working. Some of those folks have been released, and some of the furloughed people have been released. These are the fields of scheduling, training, communications, compliance. Hello, everyone. Okay. So for those of you with military clients, troops are going to continue to be paid. They were paid this Wednesday. President Trump signed a national security memorandum. I couldn't find what difference that is between that and an executive order, other than it is the commander-in-chief sending out something. He ordered the Defense Department to use whatever funds were available to pay troops during the shutdown. The troops were paid Wednesday, as I mentioned. Scott Bessent, the Treasury Secretary, indicated that the Treasury shuffled the flow of money through the system to allow for military staff to get paid. I don't know what that means, other than they used money that maybe wasn't authorized. The funds were not directly approved by Congress, but the order signed by the president said he was relying on his constitutional powers as commander-in-chief. And again, not political, right? This just happened, so you should know that this happened. We have no guidance right now on overtime. OBA was passed back in July, and it included a number of different regulatory changes. We did see guidance on tips. We saw an awful lot of guidance on tips. We have no guidance on overtime, and it was kind of funny. My daughter was trying to explain to me, she has her first real job post-college, and she gets paid overtime when they ask her to work an extra shift, or she stays over the shift. And she says, but they still take the tax out. I said, that's correct. And she and all of her colleagues believe that all of that overtime is tax-free. And I said, yeah, it doesn't work that way. We had a long conversation about it. And I think she delivered the bad news to her friends, who may have told her I didn't know what I was talking about, because I get a lot of that. Employers are unprepared as to how they should move forward handling the deduction. I think folks are thinking that they won't have to withhold on it. And I think we can all agree there's probably a bunch of problems there, depending what they earn, if they should or should not be withholding, because there are phase outs and and caps. Certain folks aren't going to be able to do it. And I have to be honest with you, I did not see yet if there's a recapture. In other words, there doesn't appear to be a provision that, at least for 2025, that you took out too much and now I need to pay it back. I've tried not to put things in here that we're going to have to look at in tax update, because how many times do you need to hear this? But the draft of the 2026 W-2 is out, and it has provisions for eligible tips, eligible overtime. So I don't think we are going to see a stop on the withholding. I think they want to increase these big refunds, and that's how this is going to go down. You're not going to see these withholding change. Business groups, though, have been asking the administration for guidance, how to calculate the overtime. I think they mean in terms of should we not be withholding on the 50% premium version. And they want clear rules that do not place an undue burden on companies. Well, the clear rule is you're going to withhold up to the limit, and there's a code, right? It's like TA or something. There's 3 T codes for the changes under the Trump administration, and they're going to be on the 2026 W-2, but not 2025. So as we talk about a shutdown government, the IRS reminds us that you and your clients can actually do work with the federal government electronically. So we have publication 5533, 5533A. Copies of these documents should be uploaded into the handout section. The links are on the resources page that I gave you. And basically, this tells us how to use the TaxPro account, how to log in, how to use it. And the one on the left shows our clients how to use it. Probably not a bad idea to send that along to your clients. Anybody who has an issue and they're not going to pay you to do something, hey, why don't you try and do it yourself? Here you go. And give them that accessibility. There's also a document for us how to manage authorizations using our TaxPro account. So it appears that central authorization file is not processing 2848s, 8821s. That's to be expected. But one of the things you can do is do what Mark Dombrowski calls the instant power of attorney. But basically, you go into the you go into your TaxPro account and you put in the information for that person and say, hey, I want to represent them. That person should immediately be able to see in their account that you have asked for this, and they should be able to instantly approve you, provided they have an account. Once they've approved you, in addition to being able to call PPS and do other things, you should be able to pull transcripts and do whatever other actions a power of attorney would allow you to do. Now, this came from 2 different social media postings. Everyone is deemed to be credible. And this warning pops up in the, not in our account, but in taxpayer accounts. Your client logs into their taxpayer account and it warns them, if you access to 1099 from these dates, it might be wrong. If you know David Woods, David made a joke on social media after I posted this, you might be due compensation, right? And that is the first thing I thought when I saw this, is that there was some sort of a data breach or some other issue. And that's not it. They're telling you it pulled the wrong numbers. Oh my gosh. So they've now, of course, fixed it. So you might need to go back in and you might need to amend returns if you have client prepared transcripts. So I don't know what the transcripts in that the client might give you look like, but probably we want to label our own that I pulled them and the date I pulled them, just again, so we know what we're where the source of information came from. I should have edited this. That message doesn't apply here, but this came out of a TIGTA study, and we're going to talk about that. But this is usage of apps by our colleagues. And if you look, you can see on the where's my refund? I don't care. It went up by 20 million users. Well, of course, people are looking for their refund. I find this interesting. 25%, 1.1 million less accesses to where's my amended return. That either means those amended refunds got out a lot faster, or does it mean that the darn thing just either never updates or it doesn't work? I don't know which. They have their own interactive tax assistant. I've never used it to ask general tax law questions. Online account usage. Look at that increase. 44 million to 56 million, about a 25% jump. Folks are accessing their own account. They are using them. They are doing things. I think that is mostly a positive thing. I've never used the IRS to go website or app myself, but you can see that it had a decrease in usage year over year. Okay, so TIGTA does an annual report. I should have put a slide in about who TIGTA is. Treasury Inspector General for Tax Administration. So TIGTA sits down after the final processing week of tax returns, your first week of May, 3rd, 4th, and looks at the prior season and releases a report card type report. In this report, they don't offer any suggestions to IRS, which is rare, and management doesn't have a response to any of this. It just is. This is what it is. Now, key improvements are the IRS processed more returns during tax season. They, using their numbers, they exceeded the 85% service level on the telephone. Reductions in force, reduced service levels in areas, but it didn't affect this report because all of this happened during tax season. 17 to 19% of key IRS functions responsible for the filing season have been lost. So personnel have left. That's not good. There's an initiative to move forward. More scanning has been delayed. So the IRS was looking to scan more stuff as it came in. Didn't happen. The IRS projects that accounts management ending inventory will exceed 6 million documents by September 30th, by September 30th, 2026. More than the pandemic levels. IRS has fewer IT staff, which means implementing the tax bill will be difficult. I couldn't find numbers, though, that talked about IRS outsourcing because a lot of their work is done by contractors, right? Lowest bidder. Now, we're going to talk about the phones. TIGTA had 250 complaints during the January through March period. That's all. Unprofessional, disconnecting phone calls, not providing callers with an opportunity to speak to a supervisor. I don't know. I know 3 or 4 tax pros that might have made those 250 complaints by themselves. You hear that all the time, right? Who can I call? Who can I complain to? What can I do? TIGTA listened to 831 phone calls. And TIGTA are auditors, right? They're IRS employees. They're allowed to do this. The phone messages are mostly recorded. They also have something called double jack. Double jack is when your boss might be listening to you, and during his get to know you tour, Commissioner Rettig, probably the nicest $1,000 an hour attorney ever to head the IRS, had said that he had gone around and double jacked, and he had listened to the employees, the good, the bad, the folks that actually cared about what was happening to the taxpayers. And he said overall he was actually proud of the workforce. That's a great thing to hear. So take to listen to 831 calls from April and May of 2024. And before you say May isn't tax season, I want you to think about it. That is when a lot of people are going to be calling about where's my refund? I got a notice I don't understand. That might actually be one of their busiest times of the year, probably March and May. So it's a good time. 89% of the calls were professional and well done. 11% had issues. That's not so good. I would think their numbers would be in the high 90s or should be. And again, this is TIGTA saying folks were rude, There were long wait times and disconnects. 15% of the 11% bad issues were calls that were dropped by the IRS employee. So you're not imagining it. They do let you go. They can't track why a disconnect happens. It makes you wonder if they will, because 11%, 15% of 11% is approaching 2%. That's not good, right? That they have that many drops. Take-Two thinks there should be an annual refresher training on professional courtesy on the phone call, and the IRS actually agreed with this. Usually the IRS only partially agrees with things or doesn't agree with things, just to not agree with it. So that was kind of cool. I gave you these things just so we could talk about them a little bit. So this is the final results. We said tax returns were up. Returns processed, of course, were up. Refunds issued were down a small bit. Average refund amount went up. Of course it did. Average refund of $3,000. I'd like to be average. Let me tell you, I'm so far below average, Now, I don't understand how they got to this number. Toll-free average speed of answer, 3.9 minutes. When? 8 a.m., 7 a.m.? Taxpayers assisted in person at a TAC, 996,000 people. I'll remind you, the taxpayer assistance centers, they've started closing some of them. So I don't know how beneficial they're going to be. The numbers are going to drop this year. So I wonder if they're going to replace this with average served at centers that are still open so that they can have impressive numbers. Otherwise, those numbers are going to drop. Now, overaged inventory, you can see, is inventory that's been here too long. And you can see their goals in the second column. Amended returns should not be here for more than 30 days. Oh, my gosh. I want to say 30 years ago, they were still 6 or 8 weeks. All right. Error resolution returns should take less than 5 days. Unpostables should take less than 15 weeks. Rejected returns should be resolved in under 60 days. Paper tax returns should be processed within 14 days. So how many do we have that are over that? Well, last year, amended returns, they had 647,000. This year they have 394,000. Still unacceptable, but better. The same number of amended returns in accounts management, right? AM is accounts management. SP is submissions processing. Submissions processing is the stuff we didn't get to yet. Accounts management is the stuff we didn't pay yet. Sorry about that. Paper returns. I can't believe this. I've got another number on the next page. 1.8 million paper returns still. Unbelievable. So for the year, 2024, 6.2 million. 2025, 5.8 million. So if they have 1.8 out of 6.2, that's more than 25% are still in inventory at any one time over the accepted processing time. That's insane. I get it. That's insane. We need people to be allocated to help with that work. Number of calls into the service decreased from 9.8 million to 9.6 million. The IRS's calculation for level of service is 83%. If you look to the far right, this is like a Yelp review. Take-Two is saying that number is 47% last year, 39% this year. They look at total number of dialed calls trying to get in and how many actually get assistance. That's after the courtesy disconnects. In contrast, the IRS's number only captures calls routed to an assister that ultimately they answer. So 83% of the time they're answering the phone. For any other business, 83% would be unacceptable. For any business anywhere, 47% and 39% are unimaginable. I don't mean to be opinionated, but these are things they otherwise need to fix. All right. So identity theft. Identity theft, I know, is something that we all have great disdain for the way that this happens at the service. I don't know if there's anything we can do about it. IRS uses ID theft filters to detect returns that they otherwise think would be ID theft. So returns that are identified by the filters are held until the IRS can verify your identity. Returns can use their taxpayers can use their IRS online account to fix that. There's a dedicated phone number, or they can walk into a taxpayer assistance center, and verify their identity. We've had a number of people that were first-year filers, young people. They actually were only given the option of coming in person when they called on the phone. They were told they have to come into the TAC. So, all right. Fewer returns involving identity theft were detected, according to TIGTA. The IRS wants to, but that's not a bad thing. The IRS strives to process tax returns and issue the refunds within 9 weeks. And in the past, this got them in trouble. They were in such a hurry to get the money out, we gave away fraudulent refunds. If the identity theft can't be confirmed, the IRS removes the return from processing. We know this. For 2025, the IRS used 295 separate filters to detect potential identity theft. Wow. In comparison, they fine-tuned that to 280, or they used 282 in the prior year. I don't think that's fine-tuning. If you look at the graph in the upper right-hand corner, we have taxpayer requested and IRS issued IP PIN numbers. So 4.6 million. This year we jumped that up to 5.8 million. Even the taxpayer requested ones went up by 50%. Well, the taxpayer requested ones could be folks who weren't able to claim their child. There was that override this year, if you remember. If the return rejected because the other parent claimed the child, the IRS doesn't want to get involved in the middle of this, at least in the short run. They want those returns processed. So instead, you could go get an identity theft PIN, and that would allow the return to get processed. So I think that's where that's coming from. IP PIN is known, of course, only to the taxpayer and the IRS. IRS automatically issues the IP PIN to confirm identity theft. A new PIN is issued at the start of each filing season, and we said you can voluntarily request one. So just rounding out some of this stuff, because I know it might put you to sleep, some of it, but the IRS has a tool called Fixers. Never heard of a fixer? This is their automated error resolution correction tool. They started using this during the 2022 filing season, which would have been 21 tax returns. Systemically replaces the steps of an IRS error resolution employee. Now, this is interesting and probably a good use of AI tools. The tool has been expanded each of the last 3 seasons. During 2025, it could resolve 29 error codes, meaning instead of the refund going to error correction, error resolution, and no refund being issued, the return's in hyperspace, waiting for personnel to get to it. Instead, the software said, do we have information available here that I can fix this on my own, or I can, with a reasonable level of certainty, fix this? And it does. So as of May 30th, last number available, more than 1.1 million returns were identified for systemic resolution. This is fixed. The software said, we can't process this return. It goes over to Fixers. And then what did Fixers do? This was a decrease from the same time last year, from 2.3 million returns that were identified. Now, one of the reasons we had the decrease is the rebate recovery credit and I've got the typo there. It's not recovery rebate, but rebate recovery credit, and the refundable child and dependent care credit. The last year you had those was 2021, filed in 2022. So they've all timed out, right? So, 2020. They've all timed out. So we don't need to check for those anymore. They've all aged out. The IRS has the 1099 DA return out. The reporting document. So they released a fact sheet a couple weeks ago. And we know that starting this year, we're going to be using the 1099 DA for all digital asset sales. It needs to get to taxpayers by February 17th, just what we needed, yet another due date. This will report all of the digital transactions that a taxpayer has. Sale or exchange of cryptocurrencies, sale or exchange of those collectible digital things, the fungible tokens. So Record keeping here is key. There are going to be instructions available for the form. And of course, this really shouldn't be a substitute for the work we already do with digital assets. In other words, most of our digital asset sales and transfers are probably going to be more than the 1099 DA. We're going to have to dig through it and do our due diligence. Many of our clients too, well, I didn't get a 1099 for that. I don't have to report it. There's a 1099 for that. Now, what's worth noting here, maybe not so helpful, but what's worth noting here is that odds are not one of the 1099s you see are going to look like this. This is the government issued form. Probably they're all going to get their own forms approved by the Office of Management and Budget, OMB. That's why you always see an OMB approval number on the bottom of these things. But all this information will be appearing on a document now, which hopefully will help in the preparation of returns for folks with digital assets. And this really doesn't go anywhere, but I wanted to share it with you because I thought it was kind of cool. And what this is a slide from a Pew Research study that talked about how people around the world feel about the rise of artificial intelligence in everyday life. Now, if you look to the right, young adults are way more interested than we are. But if you look to the United States, which is at the top of the how do people around the world feel, 50% are more concerned than excited in the U.S., with 10% more excited than concerned. And then equally concerned and excited, 38%. So very, very interesting. But a lot of folks are concerned, at least here in the U.S. Other places, you look at South Korea, they're more excited than they are concerned. Very interesting. All right. Thank you for indulging me there. I never know how to read those things. So we haven't had the opportunity to use this. If anybody has and they want to come on and do a webinar and talk about it, that'd be great to hear. There's now a post-mediation pilot program started by the Office of Appeals. So if you have an unsuccessful appeals hearing, you don't get to settlement. The idea here is that this is going to be an accelerated mediation session. Lasts one day. Let's get them in and get them out. Treat them and street them. It'll be facilitated by an appeals mediator who has no connection to the case. Okay. Taxpayers can bring in their own mediator if they want at their cost. I think on some of these larger valuation cases, that might be more interesting. Pilot cases, in the pilot, cases will be reassigned to an appeals team unconnected with the case. Here's an email address about the program, and that email address also appears in the resources page. Resources handout page. This is important. Those of you, if you have a data breach, the stakeholder liaison mailing address is still being monitored for these reports. So if you have a data breach, your first report is supposed to be to the stakeholder liaison. Here is the general national email address for that. Our information is that it's still being monitored. And why those slides got a little out of order, I don't know. Here's a little bit more on Fixer. Fewer returns were caught with excess gross Social Security this year, and that's because they think they improved the programming. As of May 30th, the IRS resolved 700,000, 64%. I think we said there were like 1.1 million identified. 64% of them were resolved. 36% had to go to manual processing according to the software. Well, that's okay, because the software is saying, let me try. And unlike most AI tools that, will give you a hallucinated answer, this tool says, I thought maybe I could help you, but I can't. Here you are, person. That still removed 70% of the load. Not bad. Some tax returns even that are identified are still going to need human review, and that's mostly based on the criteria on those tax returns. So the lapsed appropriation contingency plan was released. I should have moved this up where I talked about the working with the IRS during the shutdown. So they issued the updated lapsed contingency plan that's in the handouts. October 8th, they started furloughing folks. So 34,400 are furloughed, 40,000 are still at work, 30,000 are retired, if you remember, retired or terminated. So this plan was released after the IRS had remained open for 5 days using Inflation Reduction Act funding. You know, how many of these agencies now are going to try and squirrel away 30 days worth of money so they can stay open during a shutdown? Remaining employees are supposed to be working on essential systems, preparing for the 2026 tax season, and working on the implementation of OBA. Now, I got to tell you, I couldn't find where they're working on 2026 or on OBA, but the paperwork says they are. Copy of this, there's the link on the bottom. The link is in the resources pages, and there's a copy to hand out. So you should have plenty of access to this. So the contingency plan reflects totals, who's exempt and who has to stay on the job. And we just talked about those totals. And this document right here shows Group A1. Compensation is financed by a resource other than annual appropriations. These are performing work in the following categories. It doesn't say what they're working on for us, other than at the bottom, what's category A1? Certification residency program to issue residency certificates for tax treaty issues with our partners. IVES, which is the system that is used by mortgage companies and banks to make sure the income on the application matches the income on the tax return. Support work for other Treasury departments. Public Law 11921. I guess that, I don't think that's OBA. And the Special Compliance Fund work. So that's who is 39,000 of the 40,000 people, 39,870 still working, right? There. We have a new position created, and that person is managing the day-to-day operations at the IRS. So this fellow is Frank Bisignano. He is going to be CEO of the Internal Revenue Service. Conveniently, a position that does not need to be run by the Senate. He already had a job inside the federal government. We already have an IRS commissioner, which is required by law. The IRS commissioner is the Treasury Secretary, which that's a new thing. Scott Bessent. So Bisignano, he's a former CEO of Fiserv and First Data. They're both credit card processing companies. So that has a lot to do with running the IRS, I guess. And of course, there's a lot of scrutiny out there, primarily that the approval process, the vetting process was circumvented. There's an argument that says, yeah, but, right, he already was vetted for another government agency. Today in tax history, Kelly Phillips Erb, tax girl on Forbes and on the internet, reminds us that on this day in 1931, Al Capone was found guilty of tax evasion. Isn't that great? You can go see this article here. There's the link. And you can see 4 Forbes articles for free a month. So that might be a way for you to go take a look at that. These are live events where I am going to be. I'll do a better job next week making that look cleaner. But the end of this month, I'm in New York City. Even if you don't come to the conference, look for us. Come stop by. Go out to dinner with us, grab a drink. I'll be in Biloxi, Mississippi, the first week of November. I'm the only speaker for 15 hours. That's good or bad, depending on your perspective. Pennsylvania NATP, the 17th and the 18th. I'm speaking all day Monday. Erie, Pennsylvania. Not on here the 19th. Tentatively, we have a live event with Frank Agostino and the IRS again, although we don't know if the IRS is available, so I did not put that on there. January, I take a trip to Michigan to speak for the Michigan EAs. I'm doing an all-day tax update. If you need a last-minute tax update, it's in Farmington Hills, which is Detroit, I guess. January 22nd, Nevada enrolled agents, 7CE, all me. It is not a tax update. If there's any last-minute OBA stuff, we're going to throw that in there, but it's not planned as a tax update. I'm hoping on the 22nd to do 8-hour pen-to-paper S-Corp, but I need a few more people to sign up for that, or we're going to cancel it. And then on the calendar, but not no information yet, we're going to do probably 16 hours in Orlando, Florida in January. 8 hours of Rita doing international pen to paper, and I'm going to do the S Corp masterclass. So that will be coming up. Again, you should join us. $52 a month. Become a subscriber. I'd love to have you. And of course, I added the wrong place on the end. I'll get better. I'm new at this. I'm rusty. I gave you, I'm not going to sit here and read this to you. And I debated whether this should go in here, but I'm giving you the 2026 inflation adjusted amounts simply because you might need to be doing planning and projections for 2026 for some of your clients. So we've posted this information for you here, including the brackets. One of the very interesting things is the zero amount bracket, and I don't think I gave you that one. The zero amount bracket is like, how much money can I make and still pay 0% capital gains? And that's like $98,000 this year for a married couple. So one of the things we do for tax planning is we debate whether someone should take dividends out of companies simply because they won't pay any income tax on it, whether they need the money or not. So here it is. Capital gain rate, 0% for single filers between 0 and 49,450, 0% for filers between 0 and 98,500. Educator expense is going to go up to 350, and we're going to let the difference roll to Schedule A. And that's Revenue Procedure 2025-32. Has all of that good stuff in it if you need it. So thank you all for coming. There are two items here. Why do I offer NASBA and Texas credits? I figured Texas accepted NASBA. So here's what happens. Every time I run an event in Texas, and sometimes when I just email to people in Texas, they bang me into the Texas Accounting Board. If you notice, myself and several of our colleagues who I won't name have any of us that are offering NASBA have all gone and registered in Texas. If you're registered with NASBA, Texas will let you register for free. I got to be on a first name basis with a woman in Texas who has to call people and say, you can't offer a class here if you're not registered. First time she said that to me, I said, but I'm registered with NASBA. Oh, she verified that on the phone. The issue went away. The second time when she called, she said, I know who you are. I already looked it up. Don't worry about it. Third time, she calls me up and laughs and says, Mr. Sheeley, I really think that Texas draw I can't do. Do you know that since you're already regulated, you just have to file with us for no fee and we'll, have you on our database? I said, where do I sign up? So that's why we are also registered in Texas. And if you look, many of our colleagues are there too. And that's because folks in Texas kept turning us into the accounting board, even though they didn't need to. Anyone experiencing issues with the IRS online system? We've tried several times and it cannot be done online. Okay, I had that happen with someone. And do you know what showed up in the mail 5 days later, Adriana? I got a CP 575 in the mail. And this was like the 5th day of the IRS shutdown. I tried to do it online. I couldn't get it. Person had a U.S. Social Security number, U.S. address, shouldn't have been an issue. We didn't get it. I figured it was related to the shutdown. I was surprised as all get out when I got it in the mail. So if it gets you to the end, they've probably processed it and you might get it. So have the client watch their mail for it. That's a good item. I should have popped that up. I thought it was just me and I did something wrong. All right. And, you're all welcome for bringing this back. Good stuff. I'm going to try not to do tax update stuff. We're going to try to do what happened at the IRS this week. So I can't believe that that's 46 minutes of your time. One interesting thing to get from folks, we were going to put up a poll and I didn't get to it, would be 3 o'clock or 5 o'clock on Fridays. I like 3 o'clock, but if the group wanted 5 o'clock, or a lot of California people said they wanted 5 o'clock our time, we'd look at doing that. But you're all welcome. I want everyone to have a great weekend. I hope you have some time off with your families, and take care, everybody. See you next week. Same time, same channel.